thanks for joining us on episode number 6 of Colin Dambrauskas and guests within the financial and real estate space. Today we have with us Calen Kelly, who is one of the co-founding partners of blueCaribou Chartered Accountants. Calen, thanks for joining us today.
Hey, happy to be here, everybody.
So Calen is, I guess full disclosure, Calen's my personal accountant, and he's a fantastic individual with numbers. He gets everything done for me, both on my personal taxes before getting to the business space and the business stuff as well. So Calen, I made these videos as we chatted about because a lot of businesses who are still deemed essential are having to really make changes to the way they operate with COVID-19. Now yourself, I imagine there's not a whole lot of difference in terms of, what services you can render and make available, because you don't have as much interaction, I suppose, with clients. But you want to walk us through perhaps what's really changed on your end or in the accounting world in and of itself, and kind of take things from there?
Yeah, so I mean, currently the volumes we haven't really seen a change in. I mean, ultimately people still need to get their taxes filed. Businesses still have the filing requirements. So particularly with the individuals, even though the filing deadline has been extended, and then of course the payment deadline beyond that, people still like to get their refunds. Majority of people are entitled to those refunds, and certainly there are additional benefits as far as Ontario Trillium benefit or OTB. As well as GST, HST credits, July to June each year. And so those new entitlements need to be filed in order to determine what those payments might be. And so, like I say, the personal side, we've seen no slowdown. Volume is the same. The main change would just be we're currently not taking any face-to-face meetings with the current climate of things. And so individuals are dropping off, and we've implemented a web portal for our clients where clients can upload documentation. There's an intake form to get a lot of the basic questions out of the way, particularly for returning clients. And of course, we have clients who continue just to email information through as well. So, for us, the biggest change was really forcing us to get the online portal ready to go. But certainly email would have been just as accessible. The only nice thing, obviously, about the portal is that it's a bit more secure than just a direct email.
Yeah, and it's interesting actually, because I've had a lot of conversations with other businesses, and what I've noticed is a lot of businesses have changed their regular processes to be more virtual and digital, and some, such as real estate lawyers, they're witnessing a lot of signatures now digitally, which they never did before. And my question to them was, do you think this was almost like a forced change? It's actually for the better down the road? Because I don't know, correct me if I'm wrong, but do you guys think you would have gone full force into this online portal system versus kind of how things were going before if it wasn't for COVID-19?
Yeah, so 2 items come to mind on that. So the first is CRA actually for the first time has lifted the authorization to be allowed digitally. So previously the T183 form for individuals, which is the authorization form for e-file, previously always had to be actually formally signed. They didn't allow e-signing.
Oh, really?
And so I did accept that from clients from time to time, ultimately because there wasn't a lot of risk on our end, and 90% of clients were still printing, signing, and then sending back via the proper channels. But they did lift that this year, and so when we rolled out the portal formally this year, we included an e-doc sign authorization level, and it's great for 2 reasons. One, obviously it's a lot quicker for your clients to sign off because you don't have the mundane process of printing, signing, and re-uploading or mailing or what have you. And then secondly, with the digital signature, we get an automatic update via the portal that then lets me know and populates in our workflow that we can release that return for e-file. So there's certainly a big efficiency in that regard. And yeah, I mean, from the CRA standpoint, they definitely were forced to because of the climate of things. Whereas I think a lot of accounting firms were ready to do that, previously, but it just wasn't really at our disposal. So now that it is, I mean, our firm's taking full advantage. And certainly you still have people that are printing out and sending off. But most people generally, because they can just click the authorization, e-sign, offer an advantage.
Yeah, and so to your point, like, I mean, I know most accountants and most businesses love some of these new features, but do you think they'll stick? I know that they're the CRA is forced to adapt in this particular regard, but do you think they'll stick?
I think that it will. I think that it will this year as it pertains to the personal. So I think that will stick. I don't know whether they'll extend that to the business signature side, just because there's just a lot greater liability associated with obviously the filing of a federal corporation return,
Right.
T2 than a T1. So I certainly, I mean, my guess would be that they continue to allow that in the future as far as changes are concerned, just because people have been doing that for years, even though they weren't necessarily allowed. Like during the process, CRA at the end of each tax season does request preparers to send in the documentation of the T183s for an arbitrary selected list of clients. And so, I've had instances where one of those, say 25 or 50 documents was in fact e-signed. And again, there's no real recourse because the client's not actually disputing anything. So it's just more of a CRA. So, whether they extend that to business ongoing, I can see that being sort of rescinded once this is lifted. But I think you'll see next year that they continue to allow the digital signature for personal returns anyways.
Awesome. Well, I know I used your online portal for my taxes obviously this year. It's a great little process. So I think if anybody could adapt to these new required changes, the fact that we can't be, we're pushed away from having the ability to be within proximity of each other. Sometimes it's good, sometimes it's not, because you as an accountant, you obviously want to sit down and talk through things with your clients, but at the same time, have the ability to upload everything, which allows you guys to move quicker. On the note of speed, is the current state slowing anything down in terms of, finalizing returns and getting all the paperwork done? Is any differences there?
No, so I think there's pros and cons. So, I mean, we certainly are getting a lot more time back as the tax preparers, because the number of obviously face-to-face meetings is reduced. So even a 5 to 10 minute client-facing meeting in the office just takes a little bit more administrative time than obviously when people are forced to digitally send in, or even if they're manually dropping things off through our drop boxes at either location. I'm getting that administrative time back. I think the downside is more with new clients, is that items could be missed that might come up in that sort of free flow introductory conversation. Plus, people are a lot more apt to ask additional questions face to face than they are to draft up an email or respond to an email or pick up the phone.
Absolutely.
So there can be gaps. I think that might arise that way. I mean, obviously, as the preparer, you can't ask exhaustive questions to a new client or an existing client on an annualized basis. And so there's some onus on the client as far as that is concerned. But like I say, I think you're more likely to come across where there might be gaps now if you were to have the initial face-to-face, particularly with new clients, less so with existing clients, because unless their situation drastically changes, it'd be unlikely that they would forget to include something that they have.
Yeah. And for newer or even existing clients, for instance, and you guys obviously don't miss anything. You guys are superstars, but given that there's the ability to not have those conversations, and should a deduction or a claim of sort be missed, are clients kind of SOL, or do they have the ability down the road to, when it gets readdressed, if they say, shit, I completely forgot to do this? Can you guys amend that down the road, or do they need to worry about being like 110% accurate right now? Or
so you can always file an adjustment to any tax return. Depending on the type of the deduction of the claim that was missed, it would have to be filed as an adjustment. If we're the preparer, or you're returning to whoever the preparer was, they can refile, which is a little bit quicker than filing an adjustment. Okay. You can file an adjustment through the web portal for the client. You can paper file, of course. as well, but that process is slower, whereas the refile process is a little bit quicker as far as getting those changes made. So refile is a super easy way to do that might not be worth filing an adjustment for. So donations can be carried forward, student loan interest can be carried forward. Your RSP, even your first 60-day RSP contribution,
Yep.
Would be an unused contribution that you could pick up next year as well. Depending on the size of it, it could be worth your while to, make the adjustment for those credits or deductions. You could pick them up next year, or like say you can file an adjustment if you're not an existing client, or like say you return to your preparer and they can refile, which would be the quickest way to get that adjustment.
Okay, so ultimately, work with a good set of accountants and ask the right questions. If you miss something, you reach out and kind of deal with it at that point. So two biggest things. Actually, I just said the one big thing. The vast majority of people right now, discussion is around EI. Unfortunately, let's not sugarcoat it. It's a really shitty time for a lot of people when it comes to loss in income. And a lot of people, unfortunately, having to go on EI, not knowing how long it's going to be. There's job losses. It sucks. From a tax perspective, and let's not, because I want to talk about the business owners after, but typical salaried or hourly employee who's been laid off is now on EI. Is there anything they should expect or prepare for, we'll say 2020 taxes, because they went on EI for perhaps a long period of time?
Yeah, I think the biggest thing to keep in mind, although it's not necessarily going to be a top of mind concern when you're struggling financially from a cash standpoint, but the CERB, just like regular EI benefits, is going to be a fully taxable benefit in terms of income in your return for 2020. So regardless of how long it's prolonged or how much benefit you received, it's important for people to keep in mind that there will be a tax implication next year when you're filing. I expect that it will show up on your T4E, or you'll have a T4E if you haven't received one in the past, that outlines the total benefit received. And so there will be a tax implication on that. The tax implication will be based on your total income. So, the tax implication to one person isn't necessarily going to be the same to another, right? If you're someone who's making $20,000 and you're suddenly receiving a $2,000 benefit for 4 months, well, your tax implication is the same as it were before. So you're going to be paying a combined federal provincial rate of about 20.05% on that money. Whereas if you're someone who is making $95,000 and now you go on that same benefit, your tax rate is going to be closer to 37%. And so, the tax implications from person to person will be different because it's based on total income. No different than EI benefits are concerned. But yeah, people should be aware that this isn't tax-free money. There is going to be tax implications. It's going to be based on whatever your marginal tax rates were or would have been anyways on each of those incremental dollars in terms of receipts.
Yeah, and at the end of the day, some people might just not care right now because, like you said, cash flow is important. Making sure you're getting by and paying your bills. So, obviously, as a mortgage agent myself, I dealt with and still am dealing with a ton of clients deferring their mortgage payments. There's, additional. Actually, I don't want to say there's additional interest, but it's just an additional balance that you're gonna have to carry and pay on your mortgage. And yeah, it's going to cost you more than it would have otherwise, but for some people, but I can, survive the next 6 months. So I think for the vast majority of people, I think we'd all understand there's going to be some sort of implication, but you might not have, any other choice. So it is what it is.
Yeah.
But it's important to talk to the right person, right? Just understand, whether it be yourself on the tax side, myself on the mortgage side, whatever it is. There's one thing is it being charged that and having to deal with it later, but at least understanding it so you're prepared for it when it comes. I think that's like the main takeaway anyways.
Yeah, you want to be aware that there are implications. So, if we do return to some sort of semblance of normalcy, particularly from the employment side, just be aware that, you might need to save a little bit more because you won't have been taxed on that income come spring next year. So, just being aware that that is coming, so not to be surprised. And for a lot of people, it won't necessarily end up being that they're having to owe because maybe they're in a refund position every year, but suddenly they're not going to have that refund windfall that they normally have this time next year because of this undertaxed income that they suddenly are including that they weren't previously. So, for some people, it won't necessarily mean that they end up with a balance owing a debt to CRA, but just a reduction potentially in their, what they generally have as a refund every year.
Right. And what I think what I'm really taking away from what you just said is call me and I'll let you know and take care of your taxes. That's kind of what you're getting at, right?
Yeah.
Awesome. So beyond that, I know you've been a little bit different than the other calls. So my other calls so far have been more focused on like real estate. You're, basically finances and that it's very important for real estate. But anything, else that you've noticed or have top of mind in terms of the accounting world that, has been, I guess, there's no real elephant in the room per se that I'm aware of on the accounting side, but anything that you foresee being an issue if things continue down this road, or it's just like we were saying, prepare yourself and deal with it as it comes?
Yeah, I mean, on our end, I think the interesting thing will be what sort of reviews your audit process they're going to have in terms of some of these entitlements that are being paid out. So, not only the CERB payment for individuals, but also, the Canadian Emergency Wage Subsidy, temporary wage subsidy, any of these work share and student programs. So, it would be interesting just to see how the government's going to roll out, or if they roll out any sort of comprehensive review process, because certainly there could be abuses or people who maybe necessarily weren't eligible. So it'd be interesting on our end what sort of work there is generated in terms of trying to qualify people's right or entitlement to some of these benefits that they either have received or haven't yet received going forward. Just because some of these programs, we don't really know 100% what some of this looks like on the back end in terms of validating some of these entitlements.
Yeah, well, you guys are just figuring things out week by week, and I think the CRA is just figuring things out week by week. So we'll see. Last question. Will we have an NHL playoffs this year?
I don't think so. I honestly think the situation is such that, like, while players are still infected, you're not going to have teams returning together. And so unless they have a situation that has resolved the curve even further in the next month, I can't imagine them resuming play and trying to have a playoff, in the late summer when the next season's going to start, a month later.
Yeah.
Unless there was an adjustment in format, right? So if they were going to reduce the format, because yet the reality is that NHL playoffs span, 2 months. And so to try and have a playoff that starts in July, that's not done until September, and then start up a whole new year the next, like a month later, 30 days later, it's hard to envision a situation where they do that. Now, if they did some sort of consolidated or condensed format, where they're not best of sevens, but then you're going to have a lot of pushback from the hockey community at large and the traditionalists as far as trying to do that.
Yeah, because here's the thing: if they change the format and it's to the point where it's just not your standard playoff, 7 games, you have the ability to go back and forth a little bit, and you get that team that goes to the end of the final and wins that Stanley Cup, they're just going to have that big old asterisk against that Stanley Cup. And, some people don't care. You know what? I'll be honest. Toronto Maple Leafs wins the Stanley Cup of a coin toss. I'll take it. I will take it. Coin toss.
Well, the other thing too is you've had some experience. Like, you had a truncated year in the lockout with a shortened period as well. Now the playoff format wasn't adjusted, but you can make the argument that the same way that teams didn't have a full year to properly play and adapt and adjust to potentially make the playoffs, or that playoff ready team needed the 2-game slate in order to get properly tuned up, right? So, I mean, I think you do have some historic relevance as far as that truncated season is concerned, but it's tough to, you know, it's tough to say that they're going to start up a 2-month playoff that starts in July and then start a brand new season a month later. It's tough to see that happening.
Especially because we don't know if, like, I mean, these guys aren't skating, right? So do you really want a bunch of guys out there that have been binge watching Netflix and playing Call of Duty for the last 3 months to jump into playoffs? Not really.
Well, that's the other complication, is that how much lead time in terms of regular season games should they have before you jump into a playoff?
Yeah, I don't know, because the preseason games, not good. So if that's what I'm going to watch for the playoffs, I don't know.
Yeah. Well, and like I say, I honestly think the bigger issue is just, so even if you're playing in front of they're in an empty arena playing hockey, what if you have players that are still infected? Because I mean, that's the reality right now, is there are still players that have COVID-19. Like, at what point and at what are the checkpoints? Like, are these guys going to have to stay at the same, you know, rented facility for the next month, and then you still have to travel? So
yeah,
you know, there's inherent risk just in travel. It's tough to see where this is.
Well, yeah, because like, even if they test every single player before getting back into it, and everybody tests, you know, or nobody tests positive, I should say, negative, right? Idiot. They have the ability just to, you know, 2 days later go to the grocery store, and then boom, one guy gets it, everybody gets it, and it's just back to square one.
Or even when they hop on the plane, you're the visiting team, you hop on a plane, you know, what happens then? And that's really unavoidable if you're running a playoff scenario, right? Like, you could adjust the schedule down the stretch where you're playing only teams within your conference that you can, like, take a bus to or something like that to reduce your risk. But as soon as you have to hop on a plane, which is going to happen if you're running a Stanley Cup final, you're upping your risk of players infected and then infecting the entire team. And so what are we left with, right? And so I just think until the risk is so reduced across North America, right? It's not even just, that's the other issue, is that we might be under control in Canada to have a playoff but yeah, and then exactly, you've got all the international players, and then you have the U.S. where they're still on a huge upswing. And so, you know, for me, it's like, I think Canada, we might be able to be under control, but the OHL could resume, maybe, you know, only only Canadian players, I guess.
So Canadian teams only. So what you're saying is the Leafs have a chance this year.
So you're saying there's a chance.
Awesome. All right. Well, Calen, thanks for jumping in, and it'll be nice for the last call. Ideally, we'd like to get more calls going. I'll touch on that next week and see if other guys want to jump. Guys or girls, frankly, I haven't had any female business owners jump in yet. We need to get some more women representation on here. So we'll see where that goes. But thanks for jumping in, Calen. Great information. I know there's a lot of people that are asking me questions around taxes, so at least ideally this helps out. If you need your taxes done, blueCaribou is the way to go. They're you know, just like the jersey here, blue, white, and you guys got red and yellow in there too, don't you? I don't know. I'm just rambling at this point. So thanks for coming by. I appreciate it, and I'm sure we'll talk soon.
Yeah, thanks for having me, Colin.
All right, cheers, man.